Greetings and welcome back to the Global Business Channel. I'm Jonathan, and today we are unpacking another cornerstone of financial compliance, source of funds, often referred to simply as SOF. If you've ever been asked by a bank or financial institution to explain where the money you're investing, depositing, or transferring actually comes from, that's source of funds. In action, it is a crucial safeguard in the global fight against money laundering, terrorist financing, and proliferation financing. In this video, we'll break down what source of funds really mean, why it's important, where it's required under FATF recommendations, and how it's embedded in the Mauritian legislation such as the FAMLA 2002, the FAMLA Regulations 2018, and the FSC Handbook. But you should always refer to your own legislation in the jurisdiction in which you operate. We'll also look at practical examples for natural persons, legal persons, and legal arrangements. By the end of this video, you'll understand why regulators insist on verifying the source of funds and how financial institutions should approach it in practice to protect both themselves and the integrity of the financial system. Here's what we'll cover in this video on source of funds. Number one, the definition of source of funds. Number two, why source of funds matters in AML, CFT, and CFP. Number three, where source of funds is required under the FATF recommendations. Number four, where source of funds is found in Mauritian law. Number five, examples of source of funds for natural persons. Number six, examples for legal persons. Number seven, example for legal arrangements. And finally, some conclusion and key takeaways. I hope you enjoyed this video. Stay tuned until the end. Let's get started. So, what exactly is the source of funds? Source of funds refers to the origin of the money used in a transaction or investment. In other words, it explains how the customer acquired the money being deposited, invested, or transferred at a given time. It is not necessarily the person's entire wealth profile. That would be the source of wealth, which will be the topic of our next video. Instead, source of funds is much narrower. It focuses on the specific money being used for a specific transaction. For example, is the money coming from a salary, a business profit, a loan, a property sale, or could it be unexplained cash that raises red flags? That's the core of what financial institutions need to establish. Why does source of funds matter? Because without verifying it, financial institutions could be unknowingly facilitating, number one, money laundering, meaning cleaning illicit proceeds from corruption, fraud, drug trafficking, or other financial crimes. Number two, terrorist financing, moving money to support terrorism locally or globally. And number three, proliferation financing, funding weapons of mass destruction or related programs. Source of funds verification ensures that the money entering the financial system is legitimate and not the proceeds of crime. It also protects financial institutions themselves from regulatory penalties for failing to apply proper due diligence, reputational damage if linked to illicit activity, and financial risk if the funds are later frozen or clawed back to authorities. In short, checking the source of funds is a frontline defense in global financial compliance. The FATF recommendations, the global standards for AML, CFT, and CFP, explicitly reference source of funds in several areas. To start off with, Recommendation 10 on customer due diligence, which was the topic of a few videos back that we published. Financial institutions must verify the identity of customers and understand the nature and purpose of the business relationship. This includes obtaining information on source of funds where appropriate. Recommendation 12 on politically exposed persons, which was the topic of our last video. For PEPs, financial institutions must take reasonable measures to establish both the source of funds and the source of wealth. Recommendations 22 and 23 on DNFBPs extends the same requirements to designated non-financial businesses and professions. And recommendations 31 and 40 indirectly reinforce the obligation through cooperation and international exchange of financial intelligence. So, source of funds isn't just optional, it is part of the FATF framework, quite often and in most instances in well-regulated jurisdictions applicable to such cases. Mauritius has integrated these FATF requirements into its local legislation. Here are the key references. The Financial Intelligence Anti-Money Laundering Act of 2002 in the various sections 17 establishes obligations for reporting suspicious transactions and customer due diligence. Financial institutions or reporting persons must ensure they know their customers and the origin of the funds. In the related 2018 regulations, source of funds is mentioned in Regulation 3 and Regulation 12. Regulation 3 focuses on the ongoing monitoring of transactions, while Regulation 12 specifically requires enhanced due diligence for higher risk customers, including establishing the source of funds. For example, Regulation 12 requires enhanced due diligence measures for politically exposed persons, including verifying the origin of funds inclusive of wealth. And in the Financial Services Commission's AML and CFT handbook provides detailed guidance on CDD measures, stating that financial institutions must take appropriate steps to establish both the source of funds and the source of wealth, especially for high-risk customers or situations. Together, these legal instruments ensure Mauritius remains aligned with the FATF standards, especially after its prior experience on the FATF grey list. As always, you should always refer to your local legislation for the relevant provisions, in this case on source of funds. Let's now look at some examples of source of funds for natural persons or human beings. For individuals, source of funds could include, for example, employment income in the form of salaries, bonuses, pension payments, business income such as dividends, profits, or consultancy fees, sale of assets such as real estate, vehicles, or investments, inheritance or gifts with naturally supporting documentation, or loans provided from legitimate regulated institutions like credit unions or commercial banks. Financial institutions should collect payslips, contracts, bank statements, or sale agreements to validate these sources. Let's now tackle examples of source of funds for legal persons, which would in most cases include private companies and public companies. For such entities, source of funds might include operating revenues from sales of goods or services, equity or capital injections from shareholders or parent companies, loans and financing from regulated financial institutions or banks, sales of company assets such as equipment, property, or intellectual property, and of course, dividends received from subsidiaries or other related investments. Supporting documentation could be audited financial statements, contracts, or even board resolutions. Now, let's tackle some examples of source of funds for legal arrangements. I'm going to specifically reference to trusts, which also in other instances can include foundations or partnerships. Source of funds for trusts could be settlor contributions, basically meaning funds placed by the settlor into the trust, donations or endowments. For charities or foundations, this would be the case. Income from trust assets, such as rent, dividends, or investment proceeds, and the sale of trust property, which could be in the form of real estate or securities owned by the trust. Here, trust deeds, contribution agreements, and asset sale documents become critical evidence. And that brings us to the end of our deep dive into source of funds in AML, CFT, and CFP. Let's have a quick recap. We defined source of funds as the origin of money used in specific transactions. We explored why it matters for protecting the financial system against money laundering, terrorist financing, and proliferation financing. We looked at how the FATF embeds these meaning into recommendations 10, 12, and the other ones that we looked at, and how Mauritius incorporates it into the FAMLA 2002 the FIAMLA Regulations 2018, and the FSC Handbook. Finally, we went through practical examples for natural persons, legal persons, and legal arrangements. The key takeaway: the source of funds is not just a compliance box to tick. It's a vital safeguard that ensures transparency, accountability, and trust in the financial system. Thank you so much for watching. If you found this video helpful, don't forget to like, share, and subscribe to the Global Business Channel for more insights into compliance, corporate governance, and the fight against financial crime. We are going to tackle source of wealth in our next video. Stay informed, stay compliant, and I'll see you in the next one. Cheerios.